It's Friday, and we got a slew of economic data on inflation from the U.S. this week. I'm joined by Peter Cardillo for Standard Financial, and he'll weigh in on earnings as well as fundamentals. Peter, great to have you here today.
Good to be here.
Well, we got CPI figures as well as PPI figures from the U.S., and we had some hurricane effects affecting producer prices. But this morning's consumer prices did come in slightly below forecast. So tell me about Fed expectations.
But exactly, so far the data that we got this morning was basically skewed by the hurricane situation. We saw that with retail sales, which were very strong, but if you look at the ex-autos, they were basically up 0.1%, basically in line with what we were looking for.
Sure.
And then, of course, on the inflation side of things, the top line was up 0.5%, but again, core only moved up by 1%, and that 0.1%, and that was due to gasoline demand. Gasoline receipts obviously very strong due to the hurricanes.
And Peter, this is all about Fed rate expectations. It seems as though a Fed rate hike for December is already baked into the cake. So given all these expectations, what do you expect to see for the equity markets?
Well, look, the equity markets continue to go higher and higher, not based on perhaps fundamentals that suggest that we can go higher. I'm not saying that the fundamentals are not there to support the rise, but a lot of this is due, as I said many times before, to expectations of tax reforms. And if we get disappointed in that, then I think the market will certainly react in a negative way.
And earnings season is well underway here in the U.S. We got Q3 earnings out from the big banks, and one trend we're seeing across the big banks included JP Morgan Chase as well as today Bank of America and Citigroup is that bond trading revenue is being affected. Do you expect to see that from the other banks that are yet to report?
It depends. I think maybe it'll be a mixed situation depending on the overall loan demand, and so with the economy doing well and with low demand up, I don't want to guess at the earnings, but I think what we're going to see in general is a good earnings season. But again, it depends on the individual stocks.
And one thing we can't deny is record levels for the U.S. equity averages. And as we head into today's session, we'll see where the averages close. But as we head into the weekend, we have central bankers meeting down in D.C. for the G30 banking conference, and Janet Yellen will be speaking. We get inflation figures out from the UK, Eurozone, as well as China, and GDP figures out from China. So what do you expect to see next week?
Look, next week, I think, it's all about earnings. And of course, on the expectations of tax reform. And of course, China's growth rate and then inflation rate. Their imports were way up and their exports were actually half of that. And so that points that reform has actually taken place. And I want to just throw this in. If you look at oil prices today, they're way up.
Yes.
And guess why? Because we've seen an increase of almost 500,000 barrels from China. That's another sign for the oil market that rebalancing is underway.
And indeed, we're seeing WTI and Brent futures up by about 2% this morning. So as always, thank you so much for your insight and have a great weekend.
My pleasure. Thank you for having me.